The reality is that geoeconomics are now very much a part of the way in which business leaders, investors, participants in the market think. And what we've seen over time, I think, is a reality check on the ability to just put uncertainty to one side and look at the longer term trends. And that's what I and others seek to do. There's no question that the geopolitical environment continues to make waves. But what's interesting when you really look at it is that the actual markets and many businesses have continued to make progress in spite of all the noise and the activity around us. And I suspect that's what we're going to continue to see. Just look at what happened over the last 12 months and think about the scale of the geopolitical activity. And yet, the global economy enters 2026 with growth rates expected to be around 2.9%. We've seen the US economy remain resilient. We're seeing China looking for growth towards 5%, we think around 4.8%. And that's in spite of the backdrop that you highlight. Tariffs are a part of life. I think business leaders are learning to live with them and understand that in that context, what really matters is how their businesses perform, and for investors, how you factor that into your decision making.
Now, when you talk about these trends and looking at the long-term trend, how do you see capital flows and how are they being impacted in the region? Is there a shift away from the United States and more focus on Asia? How do you see it?
Well, we are seeing a bit of a rotation towards Asia. I think it is true to say there's a lot of renewed interest in Asia and renewed interest in China. Part of that has come from the resilience and indeed the impressive way in which technology has been developing in this part of the world. Part of it has also come from the resilience of the underlying economies, many of which have this two-tier system where the sophisticated technology-based enterprises are doing well and consumption is more sluggish. But on the whole, I think Asia is very much in the eye of the attention of international investors, and that does reflect itself in the flows. I think it's important to note one thing. It's not that there's a big rotation out of the United States. I think it's more that when you look at that incremental dollar, that incremental decision, some of that will make its way to Asia. And that's what we're seeing. China, India, Japan, Korea, very much on the attention of international investors.
You've named some countries there, and I want to pick on North Asia. We're looking at records being set on markets in Korea, in Taiwan. Japan is near record highs. I think this has to do with the AI epicenter. The supply chains are here. What are your thoughts on these particular markets?
Well, if we take Korea, I was at an event which seems like a lifetime ago, a year ago, when the Kospi was around mid 2,500. And the event was called Kospi 5,000. Well, Kospi 5,000 happened last week. That historic moment has arrived. And now the question is where from here? And part of the answer, of course, is where you highlighted, AI. Korea does benefit from some of the geopolitical tailwinds, and it certainly is benefiting from the sense that its technology companies, and in particular in the semi space, will take advantage of this moment and will be beneficiaries of what we're seeing with AI. Taiwan, again, you look at Taiwan, you've seen a lot of activity there. My birthday was when the Taiwan dollar tantrum happened, May the 5th. And yet here we are. I actually was in Taipei last week and had a chance to meet with a number of leaders. And there is a renewed confidence around the technology sector. And you meet with some of the companies there that really are at the bleeding edge of the technology innovations that are occurring. Japan's more a story of corporate governance reform. And I think the continued sense that topics reform is happening and that companies, and we saw some news on that later last week as well, which gives urgency or confidence to the sense that the underlying corporate governance changes will indeed lead to more activity. And with the arrival of sponsors, activism, and other factors, that bodes to the topics moving in a northerly direction. That's why these countries, I think each of them does have slightly different nuances, but yes, they're beneficiaries of technology and other factors.
Is there any market in particular that you do favor? I was in Taiwan recently as well. I happened to be there when the trade deal was announced with the United States. So more investments going over in the hundreds of billions from many of these North Asian economies. Do you have any favorites in the region?
You know, I have to love all my children equally. I'm responsible for the Asia Pacific for Goldman Sachs. And the reality is, I think if you look at these markets, there's actually a pretty strong tailwind for most of them, including China equities, where we have a call to see China equities rise by about 20%, Korea by about 19%. So these are big numbers. And the numbers, I think, reflect the reality that we were just discussing. The tailwinds now are quite strong. Of course, there are going to be bumps in the road, so it's not going to be a straight line. But I think when I look across the markets we've been discussing, I think all of them has a lot to look forward to this year.
So 20% for China. What is your house view on the economy, on the market?
Well, the house view in the economy is we think growth, GDP growth, of about 4.8%. That's above consensus. And it's largely because we believe that the export model at least has another year or two to run. Because, of course, you have this bifurcation of the economy. Deep strength in the high-tech manufacturing arena, which is really powering record exports, but also a record trade surplus, $1.2 trillion. December, the biggest month for a long, long time. That gives rise to strength. It gives rise to some confidence in the year ahead, but there's also a caution. And when you look out further ahead, you ask, and I think it is legitimate to ask, how will the model evolve? Can it continue to be one where exports drive this economic growth without domestic consumption playing its full role? And for that model to continue, of course, you need to be able to export to markets that are willing to receive your goods. That's where the pause comes, because the question of how Europe and other parts of the world are going to respond to this incredible technology machine that is the Chinese high-tech economy is now very much on the cards and very much on the table. Talking to those who were in Davos from the European side, there is a bit of a call to action in Europe now to think hard about how to deal with the economic impact of these highly competitive, relatively lower cost, very good products from cars to solar panels that continue to crowd into their markets. And I think the question of what that means longer term for China is on the table. And it does mean that over time, the notion of a rebalancing will ultimately determine whether this high 4% growth, getting towards 5%, can be sustained. But for 2026, we're at 4.8%.
4.8%, it was at one point 25% of the economy was the property sector. We're seeing sluggishness there. It's persisted for the last 5 years since the most recent default at Evergrande, China Evergrande. How much of a drag is that going to be, the sluggishness in the property sector?
Well, it's been 5 years, 3 red lines, and it continues. And it remains a drag, but it's a diminishing drag. So let's understand what that means. It means if the headwind was as much as 2%, I mean, it was a very significant headwind, and it was running at around 0.5% per year, we think those numbers are coming down. And as they come down, the diminishing effect actually means it has reduced impact. We're probably at the point now where there's another couple of years where it's a material headwind for the Chinese market. But after that, other factors are going to come in, and that's when I think the consumption debate will be particularly urgent.
I want to ask you, I know that you're going to be making a trip to China tomorrow with the CEO, David Solomon. Are you able to share with us, what are you going to be doing up there? Do you have any important meetings?
Well, I'd like to think they're all important, but look, we're going to Beijing because it's important to hear firsthand what is happening. We get a lot of information from yourselves and from the media and from others, but there is no substitute for meeting with decision makers, understanding what's on their minds, and see for oneself what we're hearing from our clients. And so you won't be surprised to hear that's what we're going to be doing. I was in Shanghai last week, and when you hear things like, well, consumption may be getting a little bit better, when I heard that firsthand from people I've known over the years who are participants in the marketplace, it gives me more confidence that maybe we're beginning to see some signs of recovery on the consumption side. We go to Beijing with a similar sense. Let's hear what the market participants are saying, the corporates, the investors, and yes, the decision makers on the government side, so that we can leave better informed and then inform our clients and also ourselves as to how we think about China going forward.
Let's talk a little bit about the Hong Kong market, and first thing that comes to mind is the IPOs that we've been seeing here. We've had about a dozen so far this year. That follows on 114 from last year with $37 billion raised. And then we're hearing that there's more than 300 companies in the pipeline. Is there any concern about the ability to digest all of this capital activity, this fundraising in the Hong Kong market?
Well, I think the market in terms of activity in the first part of the year, and we've only been at it for 3-4 weeks, up 542% in terms of capital raised. So clearly we're seeing a very strong and continuing momentum from last year when the Hang Seng was up 27% and we had these record IPO volumes. At the moment, the market is able to digest what it's been given when it's good quality companies with a reason to go public. And I think that will remain the bar and the filter. But I see a lot of good companies coming to market, and importantly, a lot of liquidity looking for opportunity here in Hong Kong. Let's not forget that the Southbound Connect put $180 billion into the market in 2025, up from $104 billion in 2024. These are formidable numbers, and that's part of what is powering this interest in Hong Kong, and in turn creating a liquidity pool that allows for these IPOs. The aftermarket performance of many of these IPOs is actually very strong, and that's been a critical factor in looking at the strength of Hong Kong over time.
Talking about the Hong Kong market, you called 20% for China. What is your forecast for us here?
Well, I think it'll be a high number as well, probably a lower number, but we're reasonably optimistic about the Hong Kong market. And again, it's because if you look at the mix of the Hong Kong market, it's a beneficiary of some of these technology and other trends we've been talking about.
Let's talk about M&A, and Goldman Sachs, #1 in the league tables. We'll point that out. And David Solomon had said that the world is set up at the moment to be incredibly constructive for M&A in 2026. What is the outlook? What does the pipeline look like?
It's strong. I mean, as David said, we certainly saw a very strong end to the year, sluggish at the beginning, end to the year. We're pleased to be #1 globally and #1 in Asia Pacific for announced and completed M&A. We don't take that for granted. We worked very hard to be in that position. But if I look at the outlook, let's remember there really are three things driving what's going on. One is the financing of mega deals. We're actually seeing fairly large combinations, and that creates a lot of activity. The second is AI. The amount of interest in AI also means you get a lot of technology companies. And the third is the way in which credit is also being deployed, which is allowing for some of these transactions to occur. So when I put that all together, I think the outlook remains pretty positive. And importantly, what drove the M&A picture in Q4 and towards the end of last year was corporate activity. It was actually corporates looking for simplification, AI, and so on. What's interesting is the sponsors were not as active. And so you had a very strong market without really the sponsors participating in the way they may do, because sponsors have a need to both deploy and also to realize funds from existing companies, partly by taking them to public markets, partly through M&A. So I suspect we're going to see even more activity coming through from the sponsor side, which will add to what has been a strong corporate boost to M&A.